Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 15th of March, comes to you from London. And the big day today for the Federal Reserve. So we'll see the markets have already priced in a rate rise. So the key thing will be the commentary, I think, and just seeing how the markets will react to that. There will be quite a lot of volatility around the announcement, I expect. But at the moment, the dollar is poised to either keep going on the lagging line below the cloud or just break above and be back in bullish territory in the short term. We do still have these upside targets in place on the 60-minute chart, so it is still looking bullish. And of course, the medium-term picture, long-term picture are very bullish still as well. Euro is conversely just testing the cloud from above at the moment, but prices falling through the cloud. Euro still looks pretty bearish medium and long term, so it's just a case of what will happen today. And then the Japanese yen, we're seeing the dollar falling away here. So even though we're expecting a rate rise, the dollar, it isn't a dead cert that the dollar will rise on that. And we're seeing sterling recovering most of its losses yesterday, back up to 122.30 this morning. So really just unwinding pretty well all the move that we saw yesterday. So a lot of uncertainty at the moment around the currency, but again, the medium and long-term picture looks pretty bearish there. Looking at the euro sterling rate, we see here how sterling is gaining the upper hand today, and we are just crossing through the cloud after a couple of weeks of being below, so that's also just a sign that sterling is strengthening. And against the Swiss and the Australian dollar, not above the clouds. Aussie dollar is still stronger in sympathy with the US dollar, really. Looking at the stock markets, again, we see here the S&P 500 index. We're below the cloud on the short term. We haven't activated the downside target here. We're interesting to see how the markets react. Again, waiting for the commentary, really, that will go with that announcement from Janet Yellen, and it'll be more what she says rather than the rate rise itself, probably. And we're seeing here the Nasdaq is still above the cloud, so that's looking bullish. The Dow, very similar looking picture to the S&P 500, and the Russell 2000 has been in decline for the last couple of weeks. We're seeing here the futures this morning, slight rise on the Nasdaq future, so it just suggests that the market might open up as well. FTSE looking bullish above the cloud on all three time frames. We've got good upside targets here. Interestingly, on this short-term chart, we're not quite activating this latest target to 7761, but 7555 is activated, so that's 2.5% upside. FTSE 250 is also bullish above the cloud, and the DAX index also bullish. So all stock markets still looking pretty good. The Nikkei just down very, very slightly. But we are essentially just breaking out of this sideways move to the upside, looking pretty bullish, showing up on the weekly chart. Just getting ready for another run. And looking at the Hang Seng Index, just struggling to get above the cloud this morning, but interestingly, it is still looking pretty good in the medium long term. And Shanghai was up very slightly, and we are just holding on to the recent bullishness there. Indian market jumped yesterday. Last week we saw a real big jump there, and is looking bullish all round. And the Australian market also looking pretty good as well. Brent is down very slightly, still below the cloud, and these targets into 47, 48, 50 are now looking pretty likely. And WTI also looking bearish as well, so we're seeing downside targets there. US nat gas just breaking its recent run, two weeks of bullishness above the cloud, but just coming back below now. We've got downside target to $2.92. That's about 0.7% downside, so nothing very dramatic, and a lot of these upside targets still in train. So maybe, just maybe, this will be a short-term counter-trend move, and we'll get back above the cloud. Copper is just starting to turn bullish in the short term, which would take all three time frames bullish. Taking a look at gold, gold might well have bottomed. Interestingly, if we look at the trend here, really clear over the last couple of weeks below the cloud. Interestingly, we made a low yesterday at 197.50. That's above the 194.50 level that we saw in a few days ago. So the fact that we're just making these higher lows is encouraging, but of course we need to see this 1211 target for Dow theory to hold through. We need to see that 1211 level broken. So if we can get above 1211, that would be good. We've got a new upside target here of 1237. But we need to get again above that 1211 area to break to that target. So does look like gold might be putting in a floor at these levels, and just keep an eye on that 60-minute chart. If you're watching it closely, keep an eye on the 1-minute chart. Silver, not quite as clear-cut a recovery, but of course it will probably do much the same as gold. Taking a look at 10-year Treasury yields, this is really where we're seeing the US interest rate showing up, and at the moment we're just holding on to that bullishness. We have got targets in either direction. We've got a new target to 2.75% on the 10-year Treasury. That would be quite a yield. That's a 6% rise. So that would be a surprise to the upside in the announcement today, would cause the Treasury yields to go into that area. But at the moment we're bullish on all three time frames. Apple looking bullish still, as is Google, as is Amazon. All tech is looking pretty good. Facebook, which I've got a holding in, still looking pretty bullish. 138.84. Those 141 and 141. There's two targets there. That's 1.5% upside. Microsoft still looking good as well. I hold these, and Nvidia, which I sold, I'm still watching with interest, but looks like it might start to make a recovery. But we do have these downside targets, volatility towards the end of the trend, a little bit of a worry there. That's it for today. Until tomorrow, happy charting. See you then.